Well, good morning, everybody. So this is going to be the watch list for Monday, September 30th. And it's hard to believe that we only have one last trading day in the third quarter, and then we're going to start the fourth quarter. So what I always like to do is let's go ahead and start with the news. And some of you have reached out to say exactly how do I find the economic news in Market Watch? So when you go to Market Watch, just click on the menu here. You're going to want to go down to Research and Tools, and then you will click on Economic Calendar. So this upcoming week, what do we have on Monday? We have another Fed governor that's going to give a little bit of perspective and should not be too much of a movement within the market, being that about 6 of them already spoke this past week. But just do note that Powell is speaking again at 1:55, almost 2 o'clock in the afternoon Eastern time. So by then you should probably be done trading, which will be a good thing, but you never know how this might or might not move the markets. We also have Chicago Business Barometer, PMI. So again, something you'll want to be cognizant of right around that time frame, which will be 15 minutes into the market open. Then Tuesday, we do have some important numbers that are going to be coming out from PMI to ISM manufacturing, construction spending, and again, job openings. That's what the FOMC has now turned all of their attention to, is what is happening with the overall jobs market. Going into Wednesday, we're going to have ADP employment numbers before the market opens. Again, a couple more Fed presidents speaking, so just be cognizant of that. And then Thursday, jobless claims. You're going to also have the final S&P PMI, your ISM services, your factory orders. So these are important numbers to be cognizant of Thursday morning. And then Friday, it's another jobs day, right? Jobs Friday, non-farm payroll numbers, the unemployment rate, hourly wages, are they going up year over year? And we're going to want to really pay attention to what's happening with the markets on Friday. So that's kind of the news. Nothing too detrimental. I would say your most important days are definitely going to be Tuesday, Thursday, and Friday. So other than that, hopefully not too eventful. But let's take a look at a couple of the charts. So you can see that SPY made a record all-time high here earlier on Thursday before it then started to sell off to the downside a bit. And then Friday was just kind of a lot of market chop back and forth and a slow grind to the downside. Options premiums really didn't do anything. Theta was actually taking over the overall decay. So what I would look for is this 570.07 level. Will that end up holding, where you can see we're using it as resistance and then support, and then constantly they kept wicking it down below the line, but kept wanting to recover this 570 number. So that's clearly an important number to the market. So back here, if you look on Wednesday, they would constantly keep pushing it down. So if you kept taking shorts when it failed, you'd probably get stopped out fairly quickly, because 1 hour, 2 hour, 3 hour, 4 hour, and then they took it in an uptrend overnight. And then they came back down to that same level. And then every time they're trying to push the market down, the bulls are stepping in and pushing it higher. So it's been very, very frustrating if you've been trying to short this market whatsoever. So you definitely have to have a lot of patience with this. The other one I want to look at is QQQ. So you can kind of see the exact same thing. Now SPY, where it hit, all-time highs, we did not approach that with the Qs. I mean, the Qs all-time high was all the way up here at 505, and we're trading in the 480s. So tech has started to show a little bit of weakness. And this was a prior pivot that I had right here at about 486.23, where it was resistance, and then we're trading in a zone, and they kept, again, coming down, grabbing liquidity, pushing it up, grabbing liquidity, pushing it up, grabbing liquidity, pushing it up. So we are now starting to fail this in the overnight, and we are now pushing down to this 485.54. I would watch this on the Monday open to see where we're going. And then again, if it holds below 485.50, then could that create an opening for a short position to the downside to 483.63, which again, we were using it as resistance, and then it turned into support before it pushed higher. So this would be an area of interest that I would be watching. Now, the other thing while I'm watching the individual names, right, on QQQ and SPY, I'm also watching them. So let's go back to SPY, and you'll see that we are in overall demand. There are buyers here. But if you will note where my price level is, down here at 570.07 on SPY, where we're kind of holding it for a multitude of days before they kept wicking it down, you will see that the time frame of the overall buyers is fairly weak. It's only a 45-minute zone. We are eating into the zone. So if this continues, the way I like to take these trades is play for a target to the next zone, which is a 1 hour down here at about 570. Again, a psychologically round number that the market will like. Now, we're only 50 basis points away, so that's not a lot of room to short it. So what I would be doing is waiting for it to get here and then to see, do we bounce higher? Like we did here, 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 right? We're just constantly pushing it higher. Now, if they break this 570 and the overall market is weak, then what are we dealing with? We're dealing with another 1 hour zone that is what I like to chart to the lowest level. I typically do my daily, my 4 hour, my 1 hour. I don't do my lines below that because it just makes my charts too noisy, which is why I use this indicator. But we start to eat into this, then my next target would be back down here to liquidity, going to 568 and 568 and change. So again, you can see how we keep pushing down into these zones before we get to the next round of buyers and they move higher, okay? So SPY has been relatively stronger than QQQ. But when we take a look at QQQ, we are in much more heavier demand, where we have a lot of overlapping zones, where we have a 4 hour, we have a 2 hour, we have a 30 minute, we have a 45 minute. And when you have a lot of overlapping zone, what that's telling you is on multiple time frames, the buyers were holding price. And you could see how they did that right here. Okay, the market came up, they pushed it down, consolidation, move higher, comes back down, consolidates at this level, heads higher. Now what are we doing? We're coming back down to this level. So I would definitely be watching the Qs as well as SPY if you're going to get into a trade, especially if you're going to short the market. Because if the Qs get momentum, because there's a lot of buyers here, whereas with SPY, there's not as many strength of buyers, you're going to try to go short, and then what's the market going to do? It's going to go up on you, right? And then you're going to be in a bad position. So the way I do that is I'm typically watching NQ, which are the futures, and ES, the futures. So the futures on QQQ, the futures on SPY, and where are we at, and how are they dealing with these zones as well. And you can see that it is much stronger right here on NQ. Here's where it pivoted down to. On Friday. It pivoted to that same level, moved higher. So we are in heavy demand here. So it's going to be hard to short this market unless we get some real momentum to the downside. So do pay attention to this. Now what's happening with volatility is going up, and I expect it'll keep going up as we get closer to the U.S. presidential election. So you should have your levels on SPY, you should have your levels on QQQ, but then you're watching confluence as to how are they responding together. Okay? So next thing that I want to take a look at is let's take a look at a couple of the stocks that I think there's some opportunity in, which I'm going to focus in on one sector today, which is going to be different than the technology. But what I want to take a look at is the XLE. And oil has definitely come down on an overall cost per barrel basis. You know, they were presuming it was going up to 100, and now we're below 70. So you can clearly see that we had a nice trend line here, right? Trend line broke, it consolidated, moved a little higher, and now we are trending down. Well, I think that while there's more downside pressure potential in oil, I think there's also some opportunity in this overall market. So a couple things I'm going to do is I'm going to take a fib level from a pivot low to a pivot high, and you'll see that we are now starting to come back up to 87.69. So we still have some room to move a bit up. But what I want to do is I want to take a look at the two stocks that move the overall XLE, which you should know are CVX, which is going to be Chevron. Okay, it's one of the greatest weightings in the index. So if we do that with a fib level, you'll note that we are not only recapturing, you get that to stick. It doesn't want to work for me this morning for some reason. There we go. So you'll see that we did not really reject the 50% fib level, right? And if this usually holds with consolidation, where are we going? To the next level, okay? We hold this level, where are we going? To the next level. So this has been acting fairly overall bullish in nature, okay? Let's look at the other one that's a big part of the index, XON, ExxonMobil. Let's do the exact same thing here. So with ExxonMobil, you can see that we not only held the 50, grab the top of that, to the bottom of this. You'll see we not only held the 50, we held it, we moved up to the 618, we bounced at the 50, and now we're holding the 618. Where are we typically going to next? The 786. So I definitely think that there's still room to the upside in the overall XLE. Now, do you play XOM, do you play CVX, or do you play the XLE? For me, I think that there would be room for the XLE to keep moving higher to this pivot. So something to look for is, do you go out with a 80, I guess I would have to look at the strikes and see what's out there, right? But do you go with a 88 call, an 89, a 90 call? In anticipation, you're still going to have strength in the two market dominating leaders that are going to move this higher. Now, you also have Warren Buffett's largest position, which is Oxy, that is not performing well at all, and this one is struggling. So if you get to a bit of momentum in these smaller names that are still going to start pushing toward the fib, and the two market leaders are pushing higher because they're holding their fib levels, then the overall XLE should start to go higher. One other name that is going to be announcing earnings this week is going to be Nike. So this one I talked about in the past. I said, watch for it to start to enter and hold the gap fill, right? So we entered it, we started to move up, and then we failed it, and we are now re-entering it. The other thing you will note too is that I had a support back here from April 5th of earlier this year that I was watching, right? So we are now holding this major support, which broke on bad earnings news. We did consolidation. I shared with you, you can go long once you break above this. And we didn't quite come down and retest it. But what are we doing moving higher now? We have earnings coming up. I think what I would look for is the expected price movement of Nike is going to be 6 to 8% on earnings. They do have a new CEO. So again, you know that the earnings are one thing, but it's the guidance and the storytelling that ultimately moves the stock. So we have earnings coming up here on Tuesday. What I would look for is possibly a $95 call or the $100 call in Nike. Now, again, you can tell that this has on a daily, still, look how far we are from these all-time highs at 174, 178. I mean, we're $90 off, and I think we definitely have done the consolidation down here. We're now going to move up, and then the next target that I would look for resistance is about 98.04. So, somewhere between a $95 and $100 strike on a 6% expected move, I think is a good risk reward to the upside. Now, the other thing you could do too, because look, we're holding the zone, we're now breaking above it. So if you can get a little bit of a pullback to maybe 88.63, I know it's only $1, but $1 on every stock when you're pulling back, could be really good potential to the upside on the risk reward. Watch how it opens on Monday, right? And then if we can come back down to here, definitely calls to the upside, or just outright buying some of the stock and then selling the 95 out of the money call, or the 100. I'd probably go to 95 just for the gap fill. Just sell next Friday's 95 out of the money call. And if the stock drops, I still think with the news, the new CEO, all of the monetary easing in China, the weakness of the US dollar, these are just all tailwinds for Nike. And if you look at it, we're on a decent trend line to the upside. I mean, so it is, for the most part. Let's do this. Probably need to bounce back. We got a couple trend lines here that you can actually follow, right? So worst case scenario, we stay below. Just move that down just a tad. There we go. We stay below, we stay in the channel, but I think the channel is still valid until we break below here. So those are some of the things that I'd be watching. The market is truly, truly fully valued. I would not be chasing this to the upside. I would also not be trying to overly short it, just because of the pure strength that we have had moving up and the overall demand that we are seeing for buyers. So with that, have an absolutely fantastic week. This will be posted in the Bank Trades Discord. And if you haven't signed up for it, make sure you jump on that because it is 3 months free. And the signals that have been put out this week by Flint and Bryce and everybody else have been just literally pure money. So with that, have a fantastic weekend, and we will all talk soon. Take care.